Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, I'm going to link that in the top right hand corner of your screen. Watch that before watching this one so that you have more context. Now, I also have two donation links down below in the description. If you want to support Ukraine, you can do so by going over to the official websites and donating through the funds. And yeah, thank you all for watching. Thank you all for supporting the channel. And let's get straight into the technical analysis. So as you can see, we are in this falling wedge here, or at least we were, and we started breaking to the upside, and we did have a quite of an impulsive move to the upside, closer towards the golden ratio, actually exactly towards the golden ratio of this Fibonacci retracement, which I gave you in the last video. So you do have your swing low over here, you have your swing high over there, and the golden ratio was at 0.02171. That's exactly where we pumped into. And obviously this happened after we bounced from the descending support trend line here. I told you that this would be a great entry point. And since that happened, we have seen a very nice move to the upside of around about 21%. So that was a nice swing trade for you. And since that peak, we have moved down 13.1%. So nice swing trade. Like I said, the technical target for this falling wedge is going to be all the way up here where it was created at 0.03381 cents. Now, I don't think we're going to be getting there anytime soon. This may take quite a while, but if we continue with this bullish uptrend with Bitcoin towards the upside into November, we may actually see that level met and we may actually go even higher. And if we take a look at another Fibonacci retracement here, you can see that your 1.618 level here is going to be at roughly 5 cents. So that is the price that we're going to be looking at if we break through this high that we printed in August. Only after that. And you are in this potential head and shoulders pattern with your neckline over here. And as you can see, we've bounced off of the neckline multiple times. We haven't lost it, so we don't have the technical target to the downside. So all is good as of now, but still you're breaking through a major resistance level, which is good, a multi-week resistance, and you're holding the 786 of the Fibonacci retracement. So you're doing everything you need to do. You're breaking above the 20 EMA, at least trying to do that. Your next target is going to be the golden ratio once again and the 55 daily EMA. So if you're looking for a mid-term or a short-term trade, then potentially look for entry off of the 20 EMA towards the 0.618. That's going to give you a 9.7% trade. That's not too bad in my opinion, but if you're buying Harmony One for the long term, then I would say these are very, very good levels to dollar cost average at, because you're very near the bottom here that we printed in July, at the beginning of July. And so basically the bottom was at 0.01646 cents. And right now you're sitting at 0.0198 cents. So that's just a little difference there that doesn't really make it doesn't really make a lot of sense for you to wait for this low, because you may not come back down that low, okay, unless Bitcoin starts dropping. So you really want to be exposed to the markets in some way at all times. Obviously, never go all in, but I would suggest just buying up the coins at these lower prices. So if I start zooming out here, you can see that we have a second larger Fibonacci retracement, okay? So you have two highs here, a double top, so you can start counting the fib, or start the fib from either of those highs, and you have this low here. And obviously you have the 1.618 here at 0.01309. And if I just remove all of the price tags here so that they're not blocking the prices of the levels, you can see that we have our 1.618 Fibonacci target here at 0.01302 cents. So that's something that we may be targeting if Bitcoin starts to capitulate and starts to go below $16,000, below $17,000, below $15,000. So from where we are right now, that would be another 34% dump which is quite hefty for Harmony One, but this would be a golden entry point in my opinion, especially if you're going to be a long-term holder, if you're planning to stake for the next couple of years. And this level does have some validity because this is actually the bottom that we had here in February of last year once you had that little pullback, right? So yeah, I'm talking about the white support trend line, not the 1.618. Sorry, I got a little bit confused there, but that is actually the bottom that we bounced off of here in July. So you can see how you can take a look at previous wicks and just see where your potential next bottom is going to be. But regardless, the 1.618 is still our technical target because we are below the first fib level, and until you get back above that, the 1.618 is still going to be our target. And yeah, we're just hovering around the 1.414, but I do think there's a huge chance that we may end up down here in a month or two if we see another capitulation. But for now, we're doing everything we need to be doing because we're holding this low here. We're not dropping lower, so essentially we're just printing a nice double bottom pattern. So we'll see if we can break through that technical target. I already gave you the potential target that we have to the upside from there. Now let's switch over to the daily RSI. As you can see, we are hovering around the yellow support trend line here. We're sort of having a little fake outs below it here in September, but in October we had a nice bounce off of that and we're moving towards the upside. So if you are going to be getting overbought here above the index of 70 in the next 3-4 weeks, then I would say that's a good time to start taking just some profits because eventually you're going to see a pullback from there. We usually see a local top in November or October, or sometimes even December, and then we have a strong capitulation in December or January. And I'm expecting a recovery towards spring of 2023 and a full-on bull market starting with 2024. So I do think that this fall is going to be when we're going to print our last kind of final bottom, or this winter, I should say. And from there, we're going to start moving towards the upside with higher highs and higher lows. That's my personal opinion. I could be wrong, but at least I hope I'm right, because if I'm not, then you know, on the other hand, we have lots of time to dollar cost average into our projects if we stay in the bear market in 2023. But I highly doubt that. So yeah, now jumping into some support levels for the RSI, you can see that we have a buy zone here from 36.6 to 32.09. That's your immediate support down below. And you also have a very nice buy zone here at the index of 22.8. Now that that is your kind of no-brainer zone, because you are already below the index of 30, which means that you are oversold, which means that you typically see very strong retracements to the upside from this zone. So even if you're entering for a short period of time, you're gonna be able to sell very quickly. That's what I'm trying to say. But obviously buying as low as possible is what we're all looking for. Now let's switch over to the Binance website. Moving over to the Binance website, we are on the daily chart here, and as you can see, we are breaking from this falling wedge. We just looked at it over here on this other chart, so this is just a different chart with a bit of a different setup here. We obviously have a different Fibonacci retracement here, but I took this retracement just to see if potentially we're gonna print a low here at 0.01705. We haven't done that, so we're going to change the high and the swing low, and we basically get the same 1.618 target at 5 cents that we already talked about. So we're going to remove that for now, okay? And we're going to take a look at this sell zone that we have above us. We have actually retested that zone in August, which I was ready for because I did give you the zone. And you can see that this is the bottom that we printed in May, okay? Then you started retracing to the upside. So this is going to be another important resistance level for you. But we need to get to here before we can take a look at that. So as you can see, you dumped in June out of the zone, and then you back tested as resistance in August. And then you come back down to where you started retracing from, which is here, right? You started retracing from there, you came up, you come back down to where you started from. And from here, you're building your base for the next move to the upside. So this move, we either break through the zone, right? And we back test it as support, or if we don't, and you just get stuck in there, you're creating a double top pattern here with a potential target to the downside that's not going to be very nice. And you know, if you start getting rejected from 0.0339, I would be looking at 0.01705 as your support, because that's our bottom. And I do think if we fail to break through that level once again, we're more likely to retest this before moving forward to the upside. So yeah, that's just what I think. And let's take a look at some oscillators here on the daily chart. So you can see that the daily stochastic RSI is in the overbought, which is sometimes you do have a divergence in between the price action and the stochastic. So you can see that the RSI is not in the overbought. However, the stochastic RSI is, and the price action is nowhere to be seen as an overextended level. You can see that it's literally hugging the 20 EMA, which is the yellow line. So it's literally hugging it, and no overextensions to either side, but the stochastic shows that we are overbought. Then you should go to the weekly chart to see what's going on over there to get a better idea. And you can see that here the stochastic is actually very near the bottom and very near the oversold zone. And if you take a look at the weekly chart here, then you can see that you're slowly starting to recover from this low. So potentially this was our low here printed September 19th, and we're starting a move to the upside from there. And if we're going to be targeting this double bottom pattern, then your technical target is going to be at around about, so yeah, basically this red trend line that I gave you, that's going to be your technical target from this double bottom pattern. What I basically did is I took a trend line here and I placed it here from the top of the neckline of the double bottom pattern to the bottom of the pattern, and I placed it on top of the neckline to see what our technical target is. So yeah, 0.05304 is your technical target out of this pattern if you start breaking through this neckline. Yeah. So if I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on my Patreon, and I'm going to catch you in the next one. Goodbye and good night.